Hi guys, welcome back to my channel. This is Saad Dean, and thank you very much for all the subscriptions over the past few weeks. If you've liked my content, please like, subscribe and leave comments so I know what you are thinking about my content and how I can improve those content for you. Today I'm going to be showing you how to pay less tax. 10 tips on how to pay less tax. Now I'm going to start with the age-old cliche that death and taxes are certain in life. However, you can't avoid one, but I'm going to show you how to pay less of the other. Now, one of the biggest ways to save your taxes is through a pension contribution. Now, a pension contribution is in effect a saving plan for your future with the added benefit of a big tax relief at the end of it. Now, at the moment, the weekly pension contribution, a state pension, is only £172.20. You can't survive on that when you've retired or you've decided to retire. Now, by putting some money into a pension pot, it will grow and all the income from that is tax-free. Now, you can pay up to £40,000 into your pension pot each year. Now, for example, if you're a high rate taxpayer and you decide to put in the maximum amount, you actually only pay in £32,000. £8,000 of that gets added to your pension pot from the government, and you can claim back a further £8,000 through self-assessment tax return. So in effect, you can claim back up to £16,000 of tax relief, and you're only paying £24,000 for a £40,000 pension pot each year. Now, this is an amazing way to do that. There are various ways of saving into pension pots. You should look into it. You should speak to an advisor, perhaps auto-enrollment pension through the workplace pensions, private pensions. There are various ways, but you should start thinking about it now. There are millions of people who still have not decided what they're going to do when they retire. They have no clue. Now is the time to think about it and save your taxes in the process. Now, keep on watching for the next one. Don't forget to subscribe. Pay less tax. Tip number 2 is marriage allowance. Now, marriage allowance is one of those tax reliefs that is elective, which means that if you do not apply for it, you cannot claim it. The application process is pretty straightforward. You just need to go onto the HMRC website, find marriage allowance and apply. And you can go back up to 2016, and each year you can claim back £250 of tax relief. Now, you can apply for this if you're married or live in a civil partnership. You're a non-taxpayer and one of the partners is a basic rate taxpayer. Now, if you're a high rate taxpayer, unfortunately, you cannot claim this tax relief. Now, this allows you to transfer 10% of your allowance to your partner, and your partner can claim a £250 tax credit each year. Now, you should go straight onto the HMRC website, apply for this, and you'll get a good lump sum back, provided that you were born on or after the 6th of April 1935. Now, click and apply right away. Pay less tax. Tip number 3 and 4. Individual savings account. You don't know what that is? An ISA. You must have heard of an ISA. Everybody's heard of an ISA. If you go into your banking website, open any kind of financial news on the internet, there's always an advert for an ISA. Now, an ISA is a vehicle for you to save money up to £20,000 a year, absolutely tax-free. The growth, the interest, the dividends on an ISA, the capital gains, it's absolutely tax-free. Now, the government are encouraging everybody to open an ISA. Now, £20,000 a year, that's £1,600 a month you can put in an ISA without having to pay any tax. Now, if you're a couple, that's £40,000. And the best thing is, tax tip number 4, junior ISA. You can save up to £9,000 in a junior ISA without having to pay any tax. Now, if you're a family of 4, gosh, that's 40,000 plus 18,000, £58,000 you can save absolutely tax-free. Now, there are different styles of ISAs. You know, there's the investment and or stocks and shares ISAs. Now, even the growth, the capital gains, absolutely tax-free, but bear in mind, stocks and shares ISAs could go up and down. Look into that, speak to an advisor perhaps, research it thoroughly before investing in it, but it is a very good an advisable way to save your taxes. Now, tip number 4 coming up. Pay less tax, tip 5 and 6, dividend allowance and capital gains. You have £2,000 dividend allowance per year, which means if you take out £2,000 from your shares, your profit shares, in the form of dividends, you don't pay any tax. Anything above that, you pay from 7.5% to depending on your tax rate. But if you have a portfolio, an investment portfolio, you've made profit on it, if you've got your own company and you need to take the money out without attracting any taxes, take out £2,000 every year and you don't have to pay any taxes on that at all. Now, the next one is capital gains. Now, saving number 6. Now, you have £12,300 worth of capital allowance per year. Now, if you've sold any antiques, any cherished vehicles, anything that you own that is valuable and taxable, perhaps property, your shares. Now, if you sold any shares more than £10,000 worth, now you have up to £12,300 tax-free allowance. So if you've bought shares for £20,000 for argument's sake, and you manage to sell it for £32,300, you will not have to pay any tax on that. So you can plan how you're going to do this. So every year you just stick to £12,300 and you will not attract any taxes. Pay less tax tip number 7, research and development. Now, if you have a company that does a lot of research, looking at innovating products, innovation in technology, and various other qualifying categories, and not a lot of small companies realize how much time and money they spend in research and don't realize that they can claim back up to 230% on qualifying expenses in tax relief against your research and development. It's always worthwhile speaking to a specialist about this, but this is a huge amount of money that people are not claiming, and it's worth looking into, especially if you're a very small company and you have actually researched and developed products, but you've never realized the tax relief available on it. Look into it, it will be very beneficial for you. Pay less tax tip number 8, sideways relief. I know it sounds funny, but if you have multiple income streams and you do self-assessment and you happen to make a loss in one of your businesses and you still have a day job perhaps, or you have other income that you will pay tax on, and you happen to make a loss on one of your businesses, as long as you operate with a view to making a profit, I mean, who isn't? Now, you have made a loss on this one, you can write this tax off against other income that you have where you may have to pay taxes on. Tip number 9, if you are a UK taxpayer and you donate regularly to a charity, or even if it's one-off, they usually have a tick box that says claim gift aid. Now, if you tick that box, the charity will be able to claim back the taxes you've paid on that pound at the basic rate of 20%. So if you've given them £1, whatever taxes you've paid on that pound, they will claim back. However, if you're a high rate taxpayer, the charity will claim back 20%, but you can claim back the rest against your expenses as tax relief. Now that's worth keeping in mind. Your favorite charity will benefit if you click the gift aid box, and you can benefit if you're a high rate taxpayer in terms of tax relief. Tip number 10, it's claiming back your tax relief against your expenses for working from home and other work-related expenses. Now, if you're working from home, you've had to buy tables, chairs, laptops, you're paying for your gas, electricity, etc. You're incurring those costs and not your boss. Unless they've assigned some money to you, then you don't have to claim. But if they haven't, you can claim that through your self-assessment. Now, I've done a whole video on this a few weeks back, so I'll attach the link below. You can click on that link and have a look on the tutorial on how to claim those expenses back. Even if it's mileage where you have to go to meetings, you have to stay at a hotel, accommodation, food, etc. All sorts of things, subscription to professional bodies, you can claim all of that back. Look at my other video, and hopefully you've enjoyed these tax saving tips.